Okay.
And for people to trust in your opinion, you are supposed to possess certain qualities so that people can continuously rely and trust in your opinion or in your judgment. So for every auditor, you ought to demonstrate integrity. Integrity is you are honest. It is not that I have an issue with you and today they have called me to come and examine or review your work.
So I've got you.
So based on that, yes, I'm going to use it against you.
Yeah.
Because currently per Act 766, the Pensions Act 2008, you can only get maximum of 60% of your 3 years best average.
Best 3 years.
You can't get more than 60%. And that is also even determined by how much you get is dependent on your basic salary that you are contributing and that. So, you should have a fair idea of how much SNET will be paying you when you go on retirement. Some time past, we had few professors. You always have to give post-retirement contracts to those professors and other people. But this time around, the young guys or the young people coming up are able to acquire that knowledge you use 50 years to acquire. They are able to acquire it within 5 years. So they have the competency, they have the capabilities to come and do what you are doing and even do better than what you are doing. So what's your justification for post-retirement contract?
Good morning, good afternoon, good evening, wherever you find yourself. Welcome to the Heartbeat. When we say the Heartbeat, you respond one heartbeat at a time. Heartbeats is a place where we talk about well-being, lifestyle, as well as general health. When we talk about health, we mostly focus on mental health, physical health, emotional health, and all the rest, except one aspect of health that mostly our mind does not go there, which is financial health. When it comes to financial health, most of us don't see, when I get the money, I can spend it anyways because it is my money. We don't show accountability. We don't show any form of auditing ourselves. Today on the Heartbeat, I have with me Mr. Kwame Boakye, who is a fellow of the Institute of Chartered Accountants, Ghana, and had a lot of experience in auditing and finance. He's going to let us understand when it comes to financial health, auditing, accountability, and everything that it relates to. Let's please brace ourselves. I'll let Kwame take us back, as we always do. What kind of childhood life he had? Did he always had it at the back of his mind? He wanted to be an auditor, a chartered accountant, and who he is today. What kind of values brought him to where he is today? Kwame.
Okay. Nana,
you're welcome.
Thank you for having me on this show. As you've rightly put it, mostly when we are talking about our health, we mostly look at the biological aspects and rather sometimes forget about the financial aspects. But we know that finances are the lifeline of every human being. If you have money and you are biologically sick, you are able to seek some kind of medication. But if you don't have money and even biologically you are well, you feel some way because you will not be able to acquire the things that you want to have. And that in itself is a form of sickness. Growing up, I'll say there's no bearing between what I am doing now and what I
There was no bearing.
No bearing at all.
Okay,
because
so how did you
I come from an agrarian family.
Okay.
My father is a farmer.
Okay.
My mother is a farmer. My grandparents, both my father's side and my mother's side, are all farmers.
Okay.
And at a point in time, one of my grandparents was adjudged the national best farmer during Nkrumah's time. So I came from an agrarian family. And when I was in junior high school, at the time, junior JSS, I aspired to read agric when I go to secondary school. Yeah, so I didn't know anything about business, seriously.
Didn't know anything about
nothing,
auditing and finance.
And I never even came across business persons, people who have gone to school to study business and nothing. Even though I knew of bank managers and that, but I didn't even know that is the subjects that they studied to actually get there. So it was a sister of mine who, she had completed secondary school.
Okay.
And she told me, "Oh, Kwame, you are good in maths, so why don't you study business?" So that was when my mind was drawn to business. So even that, when I was selecting my subjects, the subjects I would read or programs I would read when I go to secondary school, Agric was number one, and Agric was number one, and business was another option. But coincidentally, as the saying goes, everybody has a natural bend. So ordinarily, when you get to where you're supposed to bend, you move a little bit. And also from the biblical side, man proposes, then God disposes. So God has a plan for each and every one of us. So when I went to secondary school, fortunately, unfortunately, I was given business to read at Asanteman Secondary School. And that is the beginning of my
accounting and finance
development in the area of accounting, finance, and audit. So when I was at secondary school, I got to know that aside the maths, I was very good in accounting. And when we were even in Form 2, I was teaching my colleagues things in Form 3. So I really had a passion for accounting. And after secondary school, when I went to the university too, I pursued Bachelor of Commerce, which is predominantly accounting, and also has some aspect of financial management in it. So that is how come I ended up in this area. And also, when I was in uni, I didn't have any plan of also going into auditing. Basically,
you had no plan of going into auditing.
Yes. At uni, my plan was to complete and work as an accountant. Not go into auditing and that. But
why not go into auditing? Is it because
I didn't know anything about it? You see, what you plan doing is mostly driven by the things you see. So I didn't know anything about accounting. My sister introduced me to business. I went to secondary school, developed love and passion for accounting. Went to the university. I was very good in accounting, and not that I was able to write for grades, but I really understood the theoretical foundations of that whole thing called accounting, and also the standards that we have used in preparing our financial statement. So I had more love for that. So I saw myself as having a future of being an accountant, one of the best accountants in the country and also in the world at large. But when we were in final semester, I was there. Then a colleague of mine told me that, there is a book that they have opened at the School of Business, that if you want to do your service at internal audit, UCC internal audit, then go and write your name. They are looking for 4 people. And he was the 3rd person to write his name, so there's only 1 slot left. So I told him, please. At that time, ProCredit then had come to campus, and they were looking for people who wanted to do their service with ProCredit. So I was on my way to that place. Then I told him, I begged him, he should go and write my name for you at the School of Business. So we went for the ProCredit workshop. Then later, he told me he also asked someone to write my name. So I didn't hear anything about that. So after school, I was now looking for a place to go and do my national service, mainly in an accounting related area. So when the national service posting came, I went and I had been posted to UCC internal audit. Then I went there, and this is somebody who had only studied internal audit as just a page in auditing as a subject in the whole Bachelor of Commerce program. And I went there. I didn't know anything about internal audit, except for the fact that they say internal auditors. For internal auditors, they are staff of the organization. External auditors are not staff. They come in to come and audit, then after they leave. That is the only thing I knew. So when I went there today, the person I'm supposed to study from will say, go and buy me food, go and do this, go and do that.
National service.
But as curious as I've always been, in my own private places, I'll try to read more about what internal audit is about, and that. And finally, that is the area that I want to end my work life, and I rather prefer to be in internal audit than to move to other aspects. And the reason is that I've come to know that if you work in internal audit, you have access to every aspect of the organization, because you have to go and review the controls in any part of the organization. So it will expose you to what the accountants do. It will expose you to what the human resource people do. It will expose you to what the technical people within that organization do. So if you're in a health institution, it will expose you to what the clinicians do. If you're in a manufacturing firm, it will expose you to what the engineers do. If you're in a mining firm, it exposes you to what the mining engineers do. So if you work for a certain period of time, you will get to understand what all of them do. And it puts you in a better position to appreciate
what's happening
what they
around
do. Rather than if you are in maybe HR, which some people will fight me, or finance, which some people will fight me. You are limited to just some aspect of whatever you're doing. And sometimes you may not know what is happening in the other aspect of the organization. So that is how come I landed in internal audit specifically.
So you see, mostly people use audits, or let's say accounting and way interchangeably. Sometimes people would use accounting and audit. What's the difference between accounting and audit? Because let's say if we have a young person who is also not so clear, just as you were finding yourself living in a limbo in school, you didn't know what auditing was. You just learned a page about it. If there's a young person who is also as curious as you are, had read that page and now wants to understand, it's not accounting, auditing. What's the difference?
Okay, so accounting generically is the father of all. And as the good books say, a time will come we will all go and give account. So when we say account, you have used your life to do something. Some resources have been given to you and you have put them to use. And after a period of time, you're supposed to go and tell what you have used that resources to do, and be able to tell if you have made profit or you've made a loss out of that. So accounting generically is the father of all. But under that umbrella, you have what we call financial accounting, which is preparing the accounts. So once you have used the resources, at the end of the period, you're supposed to tell how much revenue you have made. So if you sold goods or services, how much revenue did you make within the period? And mostly we measure it over a period of 1 year. So within that 1 year, how much sales have you made, which we will call revenue? Then when you were making the sales or the revenue, you incurred certain costs. If it is goods you sold, you bought the goods to sell. So the goods come with a cost. Apart from that, you also will repackage in some cases. Then also you have workers who work for you that you pay them. You also pay certain expenses,
which
electricity,
I think they call operational cost.
So you also pay for electricity, you pay for rent, you pay for rate, you pay for water bill and others. And even the tools, equipment that you use, the equipment have a useful life. Some of them have 5 years, some 10 years, some 2 years. So as you are using them, you should be able to charge a part of the tools that you are using annually to the revenues that you are generating. So if it has a lifespan of 5 years, then you have to spread the cost of that particular equipment over 5 years. So that is what we call depreciation. So that one also have to be charged against. So financial accounting is basically looking at how much revenue you have made, the total cost you incurred in making that revenue. So when you take the cost from the revenue, then you get your profit. When you get the profit, you determine how much am I supposed to pay out as tax to government. Then after taking the tax out, how much is left to be given to the owners of that resource, the business.
Also who invested or invested.
And for the law of agency or the theory of agency, you see, somebody has the money and has set up a company and employed management or directors to manage it. Now, these people will use the resources and will prepare the financial account and say that this is how we have used the resources you give to us. This is the revenue we've made.
Yeah.
This is the cost we incurred. This is the profit that is available for you. How true is that?
Okay.
So you need another person to come and review or examine what your management is presenting to be able to tell whether what they are saying is a true reflection of what is on the grounds.
Okay.
So that is how come an auditor comes in.
Okay.
So the audit, the Latin word is audire, like hearing.
Okay.
So somebody will come and review the work of the financial accountant. Then at the end of the day, will express an opinion. Okay. So if the auditor expresses an opinion that it shows a true and fair view, then it means that whatever is stated in the financial statement is what is on the ground. Okay. Sometimes they will say that maybe except for. So in that case, they will qualify. That is a qualified opinion. Yeah. So an unqualified opinion is it shows a true and fair view. So the moment they express an unqualified opinion, it means that nothing is wrong. Okay. But if they express a qualified opinion, one of them can be that except for. So it means that there's a particular transaction. That one, there's an issue with it. But except for that one, all others are okay. Okay. And you may also have situations where the auditor will say, per how things are done, they are unable to even express an opinion. Okay.
Then that's a chaos.
Yes. So that is how come the auditor comes in. Okay. And this is how auditors were doing. But now, how can you wait for a whole year to end for management to prepare a financial statement? Okay. Then external auditors come in, come and examine the financial statement and express an opinion. Okay. They express an opinion and you find out that for a whole year, certain things have gone on wrong. Yeah. And they are now reporting on it. And if you are not able to recover, and maybe by the time they even come in, that whole 1 year, what is happening would have even collapsed your business. So that is the reason why internal auditors started coming in. That now we can't wait for the year to end for auditors to come and express an opinion. Okay. So let's get some people who are within the organization who will always review the controls so that if things are going wrong, they will highlight them. Yeah. So that by the time the external auditor comes, things have been put into shape. Okay. So that is how come internal auditors started coming. Okay. So when internal auditors started, it came out of the branch of the accounting department within the organization. Okay. And what internal auditors initially were doing was when a payment voucher is prepared to go and make payment, the same account department, there is a desk called a pre-audit unit. Okay. So that pre-audit desk, they will pre-audit to see that the things we are going to pay for, we have actually bought them. Okay. And they are okay. All right. But these pre-auditors or internal auditors were still subject to the supervision of the accountant. Okay. The director of accounts or the accounts manager. It's the accounts manager whose one leg is preparing the statement, the payment voucher. Okay. And another leg is saying that it is wrong. Okay. So it is contradicting, self-review trait. Yeah. So through the development of internal audit, internal audit had to be carved out of the accounting department so that you have a whole internal audit department who is not subject to the decisions of the head of accounts. That is how come now we see. So when internal audit came out to be independent of the accounts function, you cannot now only be doing pre-audit. Yeah. So now we had to also expand in our scope. Yeah. So now internal audit basically looks at the entire governance system. It looks at the entire risk management system and the controls that we have. Okay. So if the organization is doing anything, we come and look at what are the measures you have put in place to ensure these things don't go wrong. Okay. If you have not, internal auditors will tell you that there are no controls. Okay. And because there are no controls, you are unlikely to achieve your objectives. So put in ABC controls. If you have controls, they will check and see whether the controls are being complied with. If they are not, they will let you know so that you will be able to know as management that my staff are not complying with A, B, C, and D. Okay. And also, the game changer for organizations or businesses in modern times is your ability to forecast the risk that face you. Okay. So risk management has become an integral part of every organization, and you have to be able to look into the future to know legally,
Mm-hmm.
politically,
Mm-hmm.
technologically,
Mm-hmm.
how are things going to affect you?
Yeah.
Especially if you are in the energy sector,
Mm-hmm.
and let's say you have fuel stations and that. Now you see that electric vehicles are coming.
Yeah.
The question to ask yourself is, what
How are we going
risk
to be in business?
does this pose onto
yeah.
us? So if you find out that, okay, if in the next 5 years you are going to have about 50% of the cars on the road being electric vehicle, it is going to affect your sales because they will not be buying
Fuel.
petrol
Yeah.
or
Mm-hmm.
diesel. So now how do you also change your systems so that you also embrace the charging set point and others, so that as the world is changing, it also changes
Innovation.
with you. Then you will also always be in business.
Yeah.
So basically, that is what internal audit does. So if you are looking at the accounting fraternity, as I've said, generically accounting is the father. But out of that, you have financial accountants who prepare the accounts.
Mm-hmm.
Then you have auditors, internal and external. These are the people who will review or examine what has been done by the accountant and also other officers of the organization, and provide assurance to the owner of the business and the board of directors that everything is in order.
All right. So a lot goes on. There are a lot of things. Sometimes people feel like, oh, as for auditors, they are always looking out for faults. As for auditors, they are here. Some people even call them with different names. The IGPs of organization, the police people of the army officers are here. You know, all those things. So it looks like with all these things, there's something that is coming to my mind, that if you're an auditor, it requires certain form of integrity.
Yes.
So can you highlight some of the things that if you say you want to be an auditor, some of the qualities you had to possess? Because it means that you cannot just do things anyhow. You have to have certain qualities, certain standards that you will not bend to be there. So that if anybody wants to go into, these days, there are a lot of young people, because of what they see, because of AI, they come up with all kinds of who they want to be. Yeah. So if anybody is watching us, or any parent who want their kids to end up being in audit, they would start letting them be aware that you need to possess this and this and this as this quality. So what are some of the qualities of a good auditor?
Yeah. So as I indicated when I was talking about the various branches of accounting, I said that the financial accountant will prepare the accounts, and somebody has given resources to some team called management to put to use. Yeah. And at the end of the period, 1 year, they prepare accounts to say that this is how their stewardship have been. And another group is called to come and express opinion. So the opinion are coming to express, it is not because of your stature. That is why they have called you. Yeah. But they trust in your opinion. Okay. And for people to trust in your opinion, you are supposed to possess certain qualities. Yeah. So that people can continuously rely and trust in your opinion or in your judgment. So for every auditor, you ought to demonstrate integrity. Okay. Integrity is you are honest. Okay. It is not that I have an issue with you, and today they have called me to come and examine or review your work.
So I've got you.
So based on that, yes, I'm going to use it against you.
All right.
So you should be a person, you should be honest. You should be a person that demonstrate that integrity. Let even the people you are examining or reviewing their work, let them know that as for this person, he's very honest. Yeah. Aside that, how are you able to review the work of the financial accountant if you are not professionally competent? Yeah. You see, so you have to understand what that financial accountant is doing, because when you're preparing the financial statement, you follow some accounting standards. Principles, yeah. We have the conceptual framework. It comes in 8 chapters, which every accountant is supposed to comply with. Okay. So if you see any account or financial statement, you see that we will have the income side, we will have the expenses side, we will have the asset side, we will have liability, and we have equity.
Yeah.
There are 5 components. These 5, it is in the conceptual framework.
Okay.
So you cannot prepare a financial statement and not categorize them under these 5.
Yeah.
That is what the framework says. Aside that, we have International Accounting Standard number 1 up to 41, which used to be. You are supposed to understand, if you are reporting on inventory, IAS 2 tells how inventory should be reported.
Okay.
Even the presentation itself, IAS 1 will tell you how in the income statement you are supposed to arrange the things.
Okay.
Then aside the International Accounting Standards 1 to 41, there are, because now we are moving from make it financial reporting, because it's not just the account aspect, but you are reporting the financial statement. So we have changed to International Financial Reporting Standards.
Okay.
So from time to time, some of the International Accounting Standards are replaced. Then they are changed to IFRS. Okay. And that one too, we started from 1 and we've gotten to 17, almost 18. So you, the auditor, you have to understand all of these.
Those things.
How are these supposed to be accounted for? So for you to be good, for people to have trust in you, aside demonstrating integrity, you must also demonstrate professional competence. Okay. That competency should be there for you to be able to review. All right. Then aside that, when you go, they give you every information. Okay. The information is only for your eye. It's for your work.
Confidentiality.
Yes, so you must maintain confidentiality.
Okay.
And make sure that it's not that you have seen it, then you go out there and go and tell people. Then as you go about conducting your work, there should be a professional due care. Okay. You should be careful. The way you analyze your offense, it's not that because you have that professional competency, you are demonstrating integrity, you are confidential, you do things anyway. Yeah. Be exercise or show some due care in whatever you are doing. Then finally, you should be objective. Okay.
It's not because you know me. When you get to my session, you just close your eyes. Even things are not right.
You should be very objective. And at the end of the day, whatever you are doing, if you are showing or exhibiting professional due care, you make sure that you keep records of whatever reviews you are doing. So that at the end of the day, when you express an opinion, when anybody goes through your working papers, because for auditors, you work with papers, so we call working papers, all the documents you consult, whatever analysis you do, you put them in a file we call working paper file. Okay. We have the permanent working paper file and the temporary one. The permanent ones are the company policies and others that you consulted. But the temporary ones are the analysis you did, pictures you took, and all those to be able to help you come up with an opinion. Yeah. So if any other person should walk through your working paper, they should arrive at the same opinion. Okay. So it should be very objective. You shouldn't be biased. Now I've got to you. This is the time for me. Everybody believes me. Yeah. Yes. So I'm going to write that you have done this. I'm going to write that you have done this. No, you shouldn't be subjective. You shouldn't be biased towards anyone. You should be very objective. So these are the 5 key attributes that every auditor, whether you're an external auditor or an internal auditor, you need to possess. Once you have these things, people will always value your work and your opinion. Okay. So
talk about documents, talk about work processes and all that. How does budgeting comes in when it comes to what you do? Because I know that every year organizations are supposed to budget for the next ensuing year. Like if, let's say, last year 2025, every organization should have budgeted for what they're going to do for 2026. So how does budgeting that they put in place helps with the work that the auditor does? Because I know that people had been asked sometimes to refund on things because they spent on things that were not budgeted for in the ensuing year. So how does budgeting help with the work that you do?
So budget basically is discipline. It's a way to discipline yourself. Okay. So It's just like somebody building a house.
Mm-hmm.
If you don't have a building plan,
Okay, you build it anyhow.
Yes, anyhow.
Okay.
So today, do this. Tomorrow, you tell them do that
Mm-hmm.
and that and that. And before you realize, the building will not stand the test of time.
Okay.
So in financial aspects,
Mm-hmm.
for you to be financially disciplined, you need to have your budget.
Okay.
So as an organization, you are entering a particular year.
Mm-hmm.
So the year that you are entering, that ensuing year,
Okay.
how much revenues do you anticipate
Have it.
to raise?
Okay.
How much do you
To
anticipate
spend.
to spend?
Okay.
So when you know that how much you anticipate to raise is going to be less than how much you are going to spend,
Mm-hmm.
then you now
How
begin
you
to ask
going
yourself,
to-
how am I
how
going
you
to do that?
Mhm.
So maybe if the expenditures are very critical, such that you can't do anything without,
Yeah.
then you either put in systems to be able to increase your revenue generation capabilities.
Okay.
If it is also not possible,
Mhm.
then probably you have to raise additional capital or funds.
All right.
So if you're a company, you may either raise capital through equity.
Okay.
That is going back to the owners of the business
Mhm.
for them to bring additional capital.
Yeah.
Or you sell new shares, you issue new shares
Mhm.
for other people to also bring capital to become part owners of the company. Or aside going to the owners to raise capital through equity,
Mhm.
you can also go to the bank
Mhm.
or go to the bond market
Mhm.
to raise
bonds.
debt.
Mhm.
So when you raise debt, those people who will give you that money
Mhm.
will not become owners of the company,
Yeah.
but they will be entitled to interest payment.
Okay.
Then also when the loan matures or when the debt matures, you pay their money back
Yeah.
to them.
Yeah.
So if you don't draw your budget, how will you know that I plan to spend this, but my revenues will not be up to?
Yeah.
So this is what I'm supposed to do.
Mhm.
As a country, every year, our
Budget.
Minister for Finance
Mhm.
goes to Parliament
Yeah.
to present the budget
for
to let
year.
the country know that this is how much the government intends to raise, and this is how much the government intends to spend.
Yeah.
Where mostly our expenditure exceeds our revenue.
Yeah.
So we also have grants or supports that come from other countries.
Yeah.
Then also where there's still a gap, government will now say, okay, I'm going to raise monies by issuing treasury bills or issuing bonds, euro bonds and the others to be able to shore up the difference.
Yeah.
And if you also move to the individual lives, as an individual person, you also need your budget. Because when you wake up in the morning, you are going to spend, but you should know how your financial transactions activities are going to be. So as you have woken up this morning, how much do you intend to spend? And how much are you generating? If what you intend to spend is going to be more than how much you're generating, then you're now going to need to look at which ones can I do away with. Then you do away with them. If it brings you within your revenue, you are good to go. If it still does not bring you within your revenue, then probably you have to call your friend that, please, can you lend me something, because it is so critical for you to do. So living your life without a budget as an individual, as a company, as a country, whatsoever, it means that you are just like a cotton wool in the wind, and wherever the wind directs you,
is
go.
Where you go.
So budget basically is discipline.
Okay.
Discipline. And in the financial aspect, budget is financial discipline. Once you have it, you know that this is the plan. This is how I intend to go. Okay. And as in your question, you said that sometimes organizations are cited for spending outside their budget because they did not state it in it. Now, as a public sector institution, you will prepare your budget. The budget is sent to the ministry. The ministry will consolidate and get the ministry's budget. Then the ministry will also send it to the Minister for Finance or the Ministry of Finance. And the ministry will also consolidate all of them to get the national budget. So that is what they have approved. That these are the expenditures you are going to incur. Then you go into that year and you buy something which is not in the budget. And government knows that fine, emergencies will come up. And that is the reason why in the middle of the year, government goes to present a mid-year budget, and also where they are supposed to bring other things into it, he will present it for Parliament to approve. So as an organization, if you also prepared your budget and in the course of the year, certain things have come up which were not included in the budget, you can also update your budget so that you present it for the government's mid-year budget review.
Okay.
But if it is not in it, it means that you never plan spending.
Yeah.
So why should you spend? And they will cite you. That.
Yeah. So those are what brings about people not budgeting for things and rather spending on them. Now let's bring all that we've talked about for organization to everyday life.
Yeah.
How is it necessary for an individual to have a budget at the beginning of the year or at the beginning of the month to guide your expenditure? What somebody will even, maybe somebody is listening to us, the person might never maybe had heard about self-budgeting or personal budgeting or putting a book by your expenditure, what you spend and all that. How is it necessary? Let somebody understand the importance of budgeting as an individual and the importance of penning down your expenditure and the importance of you auditing yourself, self-audit. So these three things, how is it necessary to an individual?
So we'll begin with two parties who have met and they plan to marry. So in their wedding, they don't. So we are looking at two scenarios. So one group, they will document everything that they are going to do. Okay, so we'll buy wedding dress. This is how much you are going to spend on it. We are going to buy rents. This is how much you're going to spend.
A suit.
We are providing food for this number of people who will be coming.
You didn't mention suit. Mention suit.
No, that's the wedding dress. So I've added the wedding dress, so the gown and the suit.
Okay.
And even apart from that, you see their engagement dresses, and also even after, some people want to wear similar dress for about a week or two. So they put everything down.
Okay.
They put down the number of people that they will be expecting, the guests, and the food that they are going to provide for them, the vehicles, if they don't have their own vehicle, the vehicles that they will rent to help them in doing all their things and that. They have documented everything. And know that, okay, it is going to cost us 10,000 Ghana cedis. So once they know, they now ask themselves, how do we get the 10,000? Okay, I have this savings, 7,000. Please, can you assist with this? Okay, I can assist with 1,000. So we are still left with 2,000. They go to their extended family for support.
Okay.
So once they are able to get that 10,000, when they are doing the wedding or the program and the vendors come that, please give me my money, they are not under pressure.
Yeah.
Then look at the other group. They are marrying. They plan marrying. They never documented whatever they are doing. So they are there. Then these people will say, oh, we need 10,000 to go and do this. Then they'll go into their account, take the 10,000. It gets to a time now. The people have come. We need 3,000 to go and do this. Then the lady will ask the man, please, they said they need 3,000. And the man will be sweating because there's no money in the account. Then now the man will now call friends. Please, can you lend me 3,000? Oh, Charlie, you didn't say it early. So you are there and everybody sees that you are under pressure. Then even after the wedding program, you now have to sort all of these things. You don't have the money sitting there. So you see, having that plan is very key to help you discipline yourself, to keep you on track. Because when you have that plan, if you have put it down, and you know that there's nowhere I'm going to get money to finance all of these things, then you start canceling in some of them. Take it off. When you're going to secondary school and you take this into your father, he'll look at your list.
Some of them.
Your father knows what is in his pocket. You say, you want what? Star Kit. And you want sardine. Star Kit is not necessary. That's all that he will tell you. It is not necessary. You say you want milk. Meanwhile, there is Nido, the powder one that you go for 1 cup, 2 cups. Let's buy the 1 cup because he knows what is in his pocket. You see, so if you have not listed them, how would we be able to know that this is how I'll fare? So for budget, mostly individually, we tend to say, oh, I have a budget, but it is in our head. Once it's in your head, sometimes you forget. And ordinarily, you go to the market and you see something that you like. Because the budget is in your head. You do impulse buying. You buy it And the most painful aspect is when you get home,
You realize
you
you don't
ask
need
yourself,
it. Did I really need this?
am I the one who bought this? So you'll be faced with, or you'll be fighting with cognitive dissonance, as the psychologists will say. So you'll be fighting with your mind that, me, pa, that bought this. Why did I buy this? You have no use for it. And you are even looking for someone to give to. And now because of these spiritual things and others, people say this thing that the person is giving to you, if you wear it, so you are looking for people to give to, and they say, oh, I'm not interested in it. So plan your activities, put it in a book. You can get a small diary. You write your daily activity into it. Once you write, when you go to the market or when you set out there, if you see something, then you open your book. It is not in it. Once it's not in it, I'm not buying. I will only buy after I have bought the ones I have written.
Okay.
If I finish buying and I still have something left, then I can now attend to that one.
Yeah.
Then that will help you in doing that. For me, this year, when we entered, what I have planned doing is, anytime I buy something, if I buy even core credit or whatsoever, then I'll just take my phone, go to the note page. I have expenses for the month. Then I'll go and put the date there, right? Food, 20 cedis. Credit, 10 cedis. So that at the end of the month, I'll put all of them together and know how much have I spent in that month. And that will let me know. So I spent this money. So really, I had this money in that month.
Yeah.
Then you'll be able to tell, okay, how can I control this part so that next time I can have this amount saved in my account? Because basically, you are budgeting because you want to be able to save. And from the economist point of view, they'll tell you we have marginal propensity to consume and marginal propensity to save. When you put all of them together, you are supposed to get one. It can never be less than one or more than one. And the marginal propensity to consume is how much you consume out of the disposable income available to you. So if your marginal propensity to consume is 0.9, it means that your marginal propensity to save is 0.1. If your marginal propensity to consume is 2, it means that your marginal propensity to save is -1. And -1 means that you have borrowed money from people to add to your disposable income to spend. That is how come you are spending more than, because your disposable income is 1, and you are spending, what you are spending is twice your disposable income. You are doing negative savings. And that negative savings, you are supposed to reap by paying.
If you are listening to us, this is the heartbeat. When we say the heartbeat, you say one heartbeat at a time. The heartbeat is brought to us by Adenta Credit Union, 1115 Restaurant, Varied Ghana Foundation, Tulipa 369, and all our cherished supporters. If you have not subscribed yet, subscribe, hit the notification bell so that whenever that we post our new videos, you'll be able to get it and also understand things that we discuss about health, lifestyle, and well-being. If you just tune in, or if you just clicked on it, or if this video just hit you, we are talking about financial health. Just as we talk about emotional health, mental health, today we are talking about financial health. And my guest is Mr. Kwame Boakye. Kwame is a fellow of the Institute of Chartered Accountants, Ghana, and he is knowledgeable. He's done a lot in finance, a lot in auditing, a lot in budgeting, and a lot in all the aspects of finance. Kwame, you've spoken about budgeting and writing down your expenditure. You know, some people had never done this before.
Yeah.
And as maybe today they are watching us, they want to start. What are the few things that you will let them take note of it to be able to start budgeting, to be able to start tracking, and to be able to do self-audit? What are the few steps that you want them to take note and guide them to help them to start? Because we just entered this new year, and then maybe they didn't know about this in the previous years. They had lived their life anyhow. Some people always borrowing, so they don't really have savings. And from what you said, if you do proper budgeting and you track your expenditure, and you know it will help you to save some money. So what are the few steps that you would want anybody who has never done this or never heard of this to take into account to be able to start this journey?
Okay, so that's an interesting question. You should always have the end in mind.
Okay.
So, what do I plan to achieve at the end? God has given us 70 years to live on earth and says that He will also bless you with 10 years if you live a good life.
Okay.
So, you're expecting 80 years. But we know some people also live beyond 100 and that.
Like my father, 110.
So, if you pray to God
Mm-hmm.
that you should live up to 110 years, now you started work probably at the age of 25 years, and you can work up to 60 years.
Yeah.
That is what the Constitution allows for people to work. So if it's your own work, that one you can work to eternity till you leave this world. But if you are working for someone per the Constitution, you can work up to 60 years, especially those in the public sector.
Yeah.
Once you are 60, you are supposed to bow out of active service for others to also join and come and do their work.
These days,
So now,
there's something called post-retirement contract for those with terminal certificates. Like if somebody is a lecturer, a lawyer.
Yeah, so that one, the post-retirement contract, it depends on
availability.
It depends on what is in the market.
Okay.
So definitely in the Western world, some of the countries, their retiring age is like 65 and others, because their birth rate is less than the death rate.
Okay.
So the population size keeps decreasing. So they need people to work. Unfortunately, in our part of the world, our birth rate is higher than the death rate.
Okay.
So we keep increasing. So once we are increasing, we cannot, in our current state, increase our retirement age from 60 to 65 or whatsoever. And some time past, we had few professors.
Yeah.
So you always have to give post-retirement contracts to those professors and other people. But this time around, the young guys or the young people coming up are able to acquire that knowledge you use 50 years to acquire. They are able to acquire it within 5 years.
Yeah.
So they have the competency, they have the capabilities to come and do what you are doing and even do better than what you are doing.
Yeah.
So what's your justification for post-retirement contract? So it gets to a time, because under normal circumstances, per strength-wise, you don't have it.
Yeah.
It is only the brain. And the young guys who have the strength have also gotten that better brain than you.
And now
computers are even coming up. They don't need you.
Yeah.
So look at, you started work at the age of 25. Currently, per the constitutional provision, you are supposed to retire at 60. So you have only 35 years to work.
Yeah.
And you have also prayed to God that you want to live up to 110. So when you retire, you are going to live 50 good years.
In addition,
you worked for only 35 years. And you are going to live for 50 years. So it means that you are supposed to save money to finance your activities for the next 50 years. So under normal circumstance, if you needed 1,000 cedis to survive in a year, it means that for your 35 years of work, you needed 35,000 cedis.
Yeah.
Let's say all things being equal, there's no inflation, nothing. So the value of the currency is still the same. Purchasing power is the same.
Yeah.
You needed 35,000 to survive in that 35 years. In the next 50 years, you need 50,000 to survive. So that should tell you how much you should save, because that is your objective. So now you are going to live more years than the years you have worked.
Yeah.
So it means that you should spend less than 50% of what you earn in a month.
And save the rest.
Because you are going to live more than 35 years because you want to live up to 110. If you want to live up to 70 years, you need only 10 years savings.
Yeah.
10 years.
Yeah.
But someone 60. Who wants to live up to 110, 50 years is more than the 35 years.
Of course.
So for you, you are supposed to spend less than 50% of what you earn. So once you have this in mind, when you are drawing your budget, the residual result should be that 60% of your income should not be spent.
Into your savings.
Should not be spent. Okay. So now you start. My income for the month is 1,000 cedis.
Yeah.
I'm supposed to save 600 cedis. So you have only 400 cedis to spend.
Okay.
So that 400 cedis you have, list all the things. The economists will say scale of preference. So list all your things in a scale of preference. You need food. You can't do away with food.
Of course.
So food will be up there. Maybe for clothing, you have some from last month.
Yeah, you can manage them.
You need new ones, all right, but it may not be up there in the scale. So list your things. Your children are there. You are supposed to pay their fees. It's going to be up there. So list all of them. Then apply the 400 cedis to them.
Okay.
When you apply, the ones the 400 cedis can take care of, that is what you are spending in that month.
Yeah.
Then if there are others which you can roll over to the next month, you do. Or maybe there are some, by dime of fate, you are there in the month, somebody gives you something. Then you say, hey, okay, this is in the scale of preference. Let me address this.
Yeah.
So the starting point is your objective, your goal. What do you want? I want 50% savings.
Okay.
I want 70% savings, or 80% or 20%. Once you have that, then you know what is left for you to spend. Okay. Then you now list all your things in a scale of preference. Then you will address those that are higher or on top of the scale. Then anything that is left. So sometimes you find out that, oh, I want to buy fufu from this point, but my money cannot allow. So I have to go and buy it from the other side.
Yeah,
at the end of the day,
like,
it is the same fufu.
Food.
It's the same fufu you have eaten. Then once a while, maybe you can go there and buy that one. So that is the starting point for you to be able to do your things. Then once you have listed, once you know your objective, your target, and you have made provision for your target, and you have now listed all the things that you want to do within that particular month, and you know how much is left, and you have applied it to it. As you are moving on, keep track to be able to know whether you are on course or not. Then when the month ends, do an audit. Look at, I plan doing this. I plan to save 500 cedis out of my income of 1,000.
Was I able to do it?
Was I able to do it? So go and check your bank account. Do I have that 500 cedis there? I have it. You tick that box or you check it. Then I plan that 500 that I'm going to spend, the one left, I will spend 100 cedis on food. Did I actually spend that? You may even end up seeing that you even spent less. 80. Oh, you check it and you know you have done well. So you made a saving of 20 cedis. How did you use the 20 cedis? So once at the end of the month you have done that audit and you know that you're on course, good. How do I strengthen that in the coming months? If you also do your audit and you find out that no, I said I was going to save 500, but I ended up saving 300. Why did it happen so? It can be that somebody was sick. Either yourself, your wife, your child, or your father, your mother, any distance which you did not anticipate. Okay, this is the reason. So it is justifiable. So it tells you that in your subsequent month, you did not avert your mind to health, sickness. Now, when you are planning, factor that one into it so that you'll be able to make provision for all of these things so that it will not take you by surprise. Basically, that is what you're.
So if you're listening to us, these are the tidbits for us to start our self-budgeting, tracking our expenditure as against our budgeting, and also making sure that we are able to save. Kwame says, have the end at the beginning. So your end goal should be what should direct how you're going to budget. So at the end of it, what he sought to achieve, to save more, what he sought to achieve, to be able to do A, B, C, D. So list all those things down. You should have your focus on how you intend to save for your future. Just as he mentioned that God has given us all years to live, and we must plan to save to cover the years that will be out of job, just as he had mentioned. So all of us had to make sure, if you are doing it and you are not auditing, some people are doing it, they may not be auditing it at the end of the month. If you are doing it and not auditing, these are tidbits for all of us to be able to keep track of how we spend whatever that we earn that comes to our hands. On that note, before we wrap up, Kwame, I'm going to take you through a version what we call the rapid fire.
Yes, but I want to add, before the rapid fire, I want to add something small. You see, so once you have made your savings, you don't leave the money in that savings mode.
Please don't leave the money in that savings mode.
Because there is what we call purchasing power. And purchasing power is how much your money can buy. how much your money can buy. So because of inflation, your purchasing power works.
Okay.
So if you save 500 cedis monthly, at the end of the year, you're going to have 6,000.
Okay.
But the point is, the 500 cedis you save in January, in
have
December, will not have the same purchasing power.
Of course.
So when you save that 500, you need to invest.
Okay.
So that when you invest, the investment will bring you a return.
Yeah.
So at the end of the year, maybe that 500 cedis you saved might have given you interest of 20 cedis.
Okay.
So that 20 cedis added to the 500 will be 520.
Yeah.
So at least that 520, if inflation takes part of that 500, the 20 will come and replace it for you. So when you save, you have to invest.
Okay.
But when you are investing, there are several investment vehicles available. The treasury bill is there, government bonds are there. You have even investment houses that you go, they will take your money, put it into investment vehicles. Then when they make their returns, they will also pay something to you.
Yeah.
Some people also prefer to use their own money. So I've saved this. I'll rather open a small business somewhere. I'll go and buy some things and sell so that I can multiply my money. But the most important thing is that first try to save. When you have saved, but when you are saving, as you indicated, have the end today in mind, that this is what I intend to achieve. And if I want to achieve this, if you want to be traveling to Bahamas and others when you're on retirement, you should know how much it will cost.
Of course.
If you intend to spend this amount when you are on retirement, because definitely when you go on retirement, SNET probably will pay you something major. And as it stands, maybe in another episode, we will be able to talk about SNET issues and that, how much we even earn. Because currently per Act 766, the Pensions Act 2008, you can only get maximum of 60% of your 3 years best average.
Best 3 years.
You can't get more than 60%. And that is also even determined by how much you get is dependent on your basic salary that you were contributing and that. So, you should have a fair idea of how much SNET will be paying you when you go on retirement. And if you know how much you want to spend when you go on retirement, you can know the difference and know, okay, how much should I save? But when you have saved, put it in an investment vehicle so that it will grow. When it grows, then you'll be able to, before you realize, it may even be more than what you wanted. And you can be able to even leave some for your children and others when you're also joining your maker. And aside that too, the tax law also gives us some ways that we can plan our activities so that we can reduce our tax. And that, but mostly as per individuals, we don't look at that. Maybe in another episode, we will look at tax. How as an individual you can look at the reliefs that are available. The reliefs that are available and that. I came in contact in one of his meetings in my office. We came in contact with a person who was physically challenged. Then I asked that person, are you taking advantage of the provisions in the tax law for persons who are challenged, physically challenged? Because if you are physically challenged, the law allows that 25% of your taxable income is exempt, like you are relieved. You won't pay tax on it. So if your taxable income is 10,000 and you are physically challenged, 2,500 will be taken out. You won't pay tax on that 2,500.
But did the person knew about it?
That person said he knew, and this is, but I said, okay, if you, but so maybe in another episode we have to look at the tax reliefs and others that are available for us as individuals and that. But for now, we are concentrating on you saving. But when you save, please invest so that the money will grow. And when you are investing, please look at the various investments. Some will give you normal simple interest. Simple interest means that the interest, your money will compound just once in a year. So if they say 20%, at the end of the year, they pay you 20%. But some also compound. So some come with compound interest. Some compound monthly. If it compounds monthly, it means that even though it's the year, when the month ends, they will pay interest. Then the second month, your money plus that 1 month interest will earn interest. So at the end of the year, you will get more interest than a simple interest. So when you are going to invest, you should avert your mind to vehicles that give compound interest instead of simple interest to be able to get more on your
This is very
income.
This next episode is going to be very interesting. We're going to talk about investment vehicles and all that, and all the available tax exemptions and what as an individual we can take, because I know a lot of people are not aware of the tax exemptions and whatever,
and the SNIT, how on your own you'll be able to calculate and know that, okay, when I go on retirement, the total pension right that will accrue to me is either 50%, 52.5% or whatsoever.
And that's one of the reasons that sometimes when people they get shocked out of their life that, upon all these number of years that I've worked, this is what SNIT is paying me and all that.
And when you get to know, you know that you shouldn't worry yourself starting work at 20, because currently the total number of years that will accrue pension right to you is 35 years. So if you work for 40 years, you contribute for that 35 years. The last 5 years, whatever SNIT contribution you make will not earn you any rights. You are just giving the money to government.
All right. So on our rapid fire round with this one, I will ask you a simple question. You give me a quick answer, whether this or that. Because sometimes people have funny myths. So most of it are based on myths that people have on the topic we're discussing. So some people will say this is necessary, this is not necessary. So when it comes to, so the first question is budget or no budget?
Budget.
The second one, cash flow or profit, which matters the most in day-to-day life?
Cash. I don't know if because fire this in because profit is an opinion, cash is a fact. That's all.
Profit is an opinion, cash is a fact. So cash flow, it's more important than profit. And then third one is one daily habit that improves financial health. One daily habit that improves financial health.
Self-control.
Self-control. One daily habit that improves financial health is self-control. Please take note of it. It means that you should be able to stand on your grounds. This one, I will not buy it because it's not in my budget.
To tempt you, but
self-control.
You devil, go away from me.
The next one, what is the most common financial mistake people repeat?
I'll plan tomorrow.
I'll budget
tomorrow.
I'll budget tomorrow.
Yes. I'll budget tomorrow because
procrastination.
Today is almost ended, so I'll budget tomorrow. I'll budget tomorrow. But just as the biblical saying, Jesus said that if you hear of me, there and there you should repent and accept me. Don't say I'm going when I come back, because when you go tomorrow, you'll forget.
Okay. And then one word that best describes financial discipline.
I'll say control.
Control.
Yeah, it's all about how you control yourself. That's all.
Thank you very much, Kwame. Your final words. I'm sure your final is going to be based on this rapid fire to summarize what people should know about this topic. Your final words to our viewers.
So basically, budget is an important tool which each individual needs. And once it is part and parcel of your life, when you form a company or you are working in a company, it is something you will never do away with. And we should always write down our budget. Write it down and make sure that at the end of a period, you review yourself to see whether you are on track or you are not on track. The end goal is that make sure something is saved out of your income. Something is saved out of your income, because the days when you'll be receiving monthly alerts will come to an end. And when it comes to an end, it is what you have saved that will help you. The voter lake was not as we see today. It was just a stream. But when our former president, Dr. Kwame Nkrumah, planned to build a dam, they studied and saw that there were several tributes that could flow into that particular area. And they saw so many mountains and saw that, okay, if we block this side, we can block all the water that was coming. When they did that, for so many months and probably years, people were not getting water. Those downstream
at the end
were not getting the water again because they blocked the water that was coming. So those in Adan and the other areas were not getting the water. But when they sacrificed and the water accumulated, it got to a time, the water got to a certain level, it could overflow. And from that time, they've been getting water. And the one that we have contained there as a reservoir has been providing electricity for you and I for so many years, and it will continue to provide electricity for the next generation. So that is what budget is all about. You are supposed to save. Your budget is just going to help you put a plan together, just as our former president did. They scanned around to know where they will be able to build a wall to hold the water. And when they did that, after, they made sure they saved. They saved, and for some months or some years, people did not get water. And even those who lived upstream, they also had a problem because some people had their houses, and as the water was collected, the water took them away. It flooded those areas, and they had to be resettled.
Yeah.
But at the end of the day, that water is there. And the good thing is that it even got to a time where we said the water was too much, so we have to spill over. And that is, if you save, you do your budget and you save and you invest, it gets to a time your money will be so much that you have to spill over. And the spillover is what you go around giving money to people as a philanthropist and others because you have accumulated so much. So in a nutshell, let us try to be disciplined and have that self-control to be able to stay focused on the budget that we draw, to be able to achieve our objective of saving the percentage that we want to save. And finally, whatever we have saved, we should invest so that it will grow for us to have a good financial health. Good financial health. If you don't have money, you are sick. If you have money, you are not sick. Thank you.
If you don't have money, you're sick. If you have money, you're not sick, because there's a lot of problems that money can help us to resolve. But there's a lot of people who are not well, but they don't even have the money to be able to afford health care. What Kwame is telling us is that be uncomfortable today for a smiley day tomorrow. So let's just be stuck. Let's get that uncomfortability in savings and making sure that we get ourselves a bit rigid in going according to how we've budgeted. Let's track our expenditure and make sure that when we save, we diversify, we put it into investment, not just let the money sitting there looking at us and you say, I have this. When you can put the money into investment and make money out of it, more money out of it. So be uncomfortable today for a happy tomorrow. That is what Kwame is telling us. Thank you so much, Kwame. This has been our episode today talking about financial health. This is the heartbeat. When we say the heartbeat, you respond one heartbeat at a time. I had been your host, Dr. Nanaja Kunedu, and my guest had been Mr. Kwame Boakye, fellow of the Institute of Chartered Accountants, Ghana. Thank you very much, Kwame, for sharing your insight with us on financial. We will come again to talk about the tax relief, the SNAIDs, and all that in our next episode. Thank you for listening to us. Subscribe and hit the notification bell. The Heartbeat is brought to us by 1115 Restaurant, Adenta Credit Union, the Thyroid Ghana Foundation, and Tulipa 369 Hair. Thank you for watching. See you again in our next episode.